Welcome to this panel on the future of financial market infrastructure. My name is Jonas, and today we will talk about different facets of the market infrastructure of the future, talk about financial market, capital markets, the role of permissionless blockchain, the role of interoperability, standardization, etc. And have, I think, a very good lineup of panelists with different backgrounds from financial sector, from technology, more also from the central banking perspective, now in the startup domain. So yeah, I'm looking forward to a very interesting, enriching discussions. And maybe before we go into the discussion, let's do a quick round of introductions. Maybe I'll start with you, Jochen, and let's say we try to do it rather quick, but that everybody knows a little of the background.
Okay. Yeah. My name is Jochen Metzger, and I'm currently a non-executive director at Axiology, which is a DLT SSS out of Vilnius, Lithuania. And I have a long history with the Deutsche Bundesbank and the ECB, so I have always a little bit the central banker's perspective or the ex-central banker's perspective on my mind.
Hi there, everyone. Sabih, Behzad at Deutsche Bank. I'm assuming most people know Deutsche Bank. I've been at the bank 16 years, and I'm leading the digital assets and currencies space for the bank overall. So really looking forward to this discussion.
Hello, everyone. My name is Frank Seibold. I'm the global head of banking cap market sales at Chainlink Labs. I have spent 30 years in traditional finance technology, also selling to Deutsche Bank at some point in time. Very happy to be here today.
Hey everybody, I'm David Walsh. I lead the enterprise team at the Ethereum Foundation. I've been with the foundation a year or so, a lot of you might be thinking, what does the Ethereum Foundation enterprise team do? But we support a lot of different financial institutions and fintechs that are evaluating public permissionless blockchains and the Ethereum ecosystem. Before the foundation, have a background in consulting and spent 6 years building different staking products.
Hi everyone. I'm Denis Dounaev. I'm the product owner at DTI Foundation. I represent DTIF and ANA. We issue DTIs, which is an ISO standard for digital tokens, and also in ANA we issue the ISINs, which is the identification of financial instrument, the identifier of a financial instrument.
Perfect. Thank you very much for the introduction. Let's kick this discussion off with you, Sabih. So we have seen that blockchain, exists now for a couple of years, let's say. So 2008, 2009, we've seen there was a lot of experimentation the last decades, probably also previous years, and now it's more getting into production. It's getting out of the experimentation, so it's getting more embedded in the whole architecture. Like from a financial market perspective, what do you see in terms of transformation that is happening on the financial market due to blockchain and maybe also tokenization?
Yeah, so great question, Jonas. I think there's a couple of things to think about. Firstly, a little bit of a reflection about where we've come from. So, if you think about how institutions in the financial services sector work, typically speaking, we talk about institution-specific ledgers, and we talk about messaging as being the primary mechanism for those transactions to be captured and to flow across financial institutions. So we're moving from that type of model to a more programmable 24/7 infrastructure. And so that provides a whole host of benefits. I think the first piece there is exactly that. If you kind of think about the atomic and composable nature of what you're able to do with blockchain, it becomes quite powerful. You can take one very simple example. If you think about the trade life cycle, today, you'll have a trade, you'll have a confirmation, there'll be a clearing process, a settlement process, a custody process, and then some corporate actions at the other side of it. In a blockchain-based or token-based construct, you can actually automate and collapse a lot of those steps, which is incredibly powerful, right? So it hopefully allows you to deliver a DVP type of solution, delivery versus payment solution, that's much faster, cheaper, more atomic. So I think that's one part of the story, which is getting institutions very interested in this space. I think the other piece beyond being atomic and composable is the fact that settlement and custody can also happen in near real time, right? And that has huge benefits for financial institutions because the cost of managing collateral, the risk that you carry with that is incredibly high. And similarly with settlement, people think about settlement only from a technical perspective, but settlement is also a legal term. We had a lot of lawyers on the previous panel. And so ensuring that that settlement can be legally final as well is also very, very important. And again, that's something that blockchain provides. So I think, we've kind of come from that kind of very siloed approach. We've moved into much more of a dynamic environment. And I think banks are looking to try and figure out which parts of that technology they should embed and in what sequence. And the only other thing I would add is, I think we talk a lot about interoperability. It's a bit of a buzzword in the industry, and it's always good to throw that into a panel because it makes it sound like you know what you're talking about. But I think from our perspective, the first bit of interoperability is not just the sort of thing that Chainlink obviously helps a lot with, which is working across chains. But from a bank's perspective, it's interoperability with pre-existing solutions and systems. And that's very, very important because banks are regulated on the aggregate activity they perform. It's not a good excuse to say, well, I've got a separate digital asset system here and I'm not quite sure what that does and how that relates to everything else I'm doing. So I think ensuring that interoperability between legacy infrastructure and this new tech is really, really important as well.
So what I hear from you is basically a lot of like on the efficiency and speed side, a lot of automation, programmability in this regard, where it can facilitate atomic transaction swaps and everything. And then a prerequisite is really interoperability. And we will definitely double down on that later. And as you said, it's also in the title as a buzzword. So Jochen, coming to you next. When we look into the capital market perspective, right, where you're an expert with your central bank background, like what do you think does blockchain technology bring onto the table for traditional capital market infrastructures like trading venues, settlement system, clearing houses, etc.?
I will take it up where Saib has left the ball. This is about post-trade. DLT holds the potential, let's say, not only to improve post-trade, but to collapse it, to condense it, to make it really smooth. And the trading and the user interface, it's nice to have them, they come on top. It's the post-trade, which is, let's say, the core of this. And DLT is addressing this directly. It removes the requirement of reconciliation, the counterparty risk, the atomic, let's say, kind of is driving this away, and it unlocks the capital efficiency. And therefore, let's say, if I look at Axiology for us, let's say, yes, we are also a trading venue, but let's say the most, and let's say our core value proposition is that, let's say, we have trading, settlement, and custody in one single atomic system. And I must underline settlement and custody at least 2 times.
Turning to you next, David, because I guess now everybody in the room knows the Ethereum Foundation and obviously also name familiar in the financial sector. Like, from now a more permissionless public, kind of more crypto point of view, maybe, like what do you think do infrastructures like Ethereum or other permissionless networks like bring to the table when it comes to the future of financial market infrastructure?
I see it being the underlying infrastructure on which capital markets is built, personally. I think that's the direction of travel. You see DTCC coming out and saying that they're going to tokenize much of their inventory. You have the likes of Fidelity, BlackRock, the kind of list goes on generally there across the board of all of these institutions that are signaling towards permissionless chains. And I think a lot of that was blocked previously because of the regulatory environment. It was quite punitive in the US, to say the least, and that kind of trickled down to the rest of the world. And now that that kind of grey cloud has parted and the light is there, I think you see the innovation and the announcements coming out day by day and week by week of more people deploying actively and on production on mainnet. So a lot of our conversations generally are around how to evaluate chains, whether it's the resilience of a chain, the uptime, the liquidity, the utility creation. A very sophisticated question generally is around the neutrality of the chain, who the counterparty is, who controls the chains, is it bound to potential jurisdictional risk. So I see it kind of gradually trending that direction, and I don't see that that kind of acceleration stopping anytime soon.
Frank, turning to you next, and I really like also where you sit, so in between the bank and the permissionless infrastructure. So
Sandwiched.
Sandwich. So looking, to Chainlink, like how do you fit into that, like, in the sandwich now?
Yeah,
You do realize he's charging every time the microphone's going
It's-
across.
it's-
It's
Intermediary
You
here.
do realize that.
It's on-chain service there. You're going to get a bill later. You can pay in Link token, no problem. So yeah, very good question. Obviously, look, what we see is that the market's maturing very quickly. I have a New York lens. I'm New York based, although I'm originally from Germany. And what you see is that the new action letter that the DTCC received, tokenization, it's now a thing. We're no longer in the sandbox. So the moment that process kicked off, what happened is that the market fragments, right? People issue things left, right, and center across multiple chains. And if we look back in traditional finance land, I mean, fragmentation is something that people don't like. So how do you defragment the marketplace? And we do that. Our interoperability protocol basically allows you to bring back fragmented liquidity to your asset, which is one of the key challenges right now if you think about the issuance of tokenized assets. What they lack in many instances is utility, and that utility is that you basically can use an asset that you originate effectively as collateral at the DCC, for example. And all that requires that this asset can travel safely, seamlessly, frictionless across multiple chains. That's what we do. And then Sabih made a really great point. Interoperability has a second dimension that we refer to as orchestration, where we have to connect the platforms that exist and that will not go away for a long time. There's going to be friendly coexistence between the TradFi systems that serve purposes and shouldn't be reinvented just for the sake of reinventing them. How do you connect them to the world of Web3 and blockchain technology? And that's what we do with our CRE platform that allows you to orchestrate and create this side-by-side homogeneous environment that allows you to integrate seamlessly. We're basically infrastructure that is mission critical for the success of tokenized assets.
And of course for interoperability, right?
Correct.
Yeah. And Dennis, turning to you next. Like when somebody talks about interoperability, obviously standardization always comes up, right? And that's something where you are, I guess, the expert of the panel. Like, which role do standards identifiers play for the future, financial market infrastructure and also for interoperability?
Sure. Yeah. So I guess it's important to clarify that for us, there is difference in standards. So what we provide as a registration authority is the identification standard. So obviously there's smart contract standards and communication standards. Those are kind of outside of scope. What we provide is on one hand, we support the traditional finance, the existing systems by issuing ISINs to the new crypto instruments. So for example, all of the, I'd say probably 99.7% of all of the top traded crypto instruments already have an ISIN. So you can pick them up and plug them into your existing systems. What we also provide is the DTIs, which then identify the individual token implementation on different chains. So you can look at the risk associated with a particular blockchain or even implementation type. What's also important to highlight is that there is fragmentation. So I'll give you an example of tokenized shares. There is fragmentation not only of tokenized shares happening across different platforms, but also how these shares are tokenized. So if you look at the examples of, we just taking three, what Nasdaq announced is essentially a tokenized twin of the shares. So it will have the same ISIN as the original share. What Kraken is doing is they're using X stocks, which are registered in the EU under Swiss law as certificates. They have a different ISIN. It's a different financial instrument, which then linked to different LEI, which is then linked to different DTIs. And then you look at something like Robinhood, do it in a completely different way. They issue essentially derivatives, which are not really shares. They're more like a tracker of the price. So you have a lot less rights and have a different ISIN, a different LEI. So what we provide through our work with ANA, which issues ISINs, ourselves, and Glyph, which issues LEIs, is the ability to distinguish these different assets across different platforms, their functionality, their attributes. And that then allows interoperability between different systems because you can see what exactly is being traded, what's underlying, who is connected to that, and it kind of gives that visibility to market participants and regulators.
Let me now double down a little bit on the infrastructure, because I think it's very important to discuss like permissioned versus permissionless markets. I also find this very fascinating because I guess there are arguments for both sides on the table. So maybe Sabih is starting with the more institutional perspective on that. I mean, my feeling, interpretation is that there is a very, I would say, like a strong preference currently for permissioned setups, but please correct me if I'm wrong. Like, if so, why, and what are the key reasons when you look into, and which infrastructures to build your use cases on top, or which infrastructures to dock on?
Yeah, I think the discussions moved on a little bit from where it used to be, which was a kind of very simplified permission versus permissionless type of discussion. I think now there's much more of a decision framework around what is it that we're trying to achieve for that particular product and service? What does the client want? How are we going to ensure some of the key features? So, for example, if regulatory adherence is required, which it usually is in the application that we deal with, can we ensure, for example, KYC can happen at the right place at the right time for the right product? Are there privacy-preserving mechanisms in place where we need to ensure that transactions that are taking place are appropriately masked? What does the settlement finality look like? What is the governance? So, what I would say is I think there isn't a kind of one-size-fits-all. I think there was a time when the only option was a permissioned option, and that was partly driven through the fact that governance and control were very clear in a permission setup versus not so much in a permissionless. I think the technology has moved on. That's one aspect. And so there are lots of great solutions. And, Ethereum obviously is one blockchain where, there are opportunities through various mechanisms to ensure privacy can be preserved. So that's a good example where the technology has moved on. But also, I think, regulators' discussions and kind of their viewpoints have also moved on. So I think before they would have been entirely dismissive of permissionless chains. I don't think that's the case now. I think you can have actually a very good conversation depending on the use case that you're trying to do. So, look, for me, the simplest way I think about it is the permissioned space tends to give you that governance and control. Permissionless gives you distribution that's unparalleled and unrivaled, and quite frankly, battle-tested as well, which is hard to weigh up. And so it always comes down to a use case by use case thought process rather than a one-size-fits-all.
That was a very balanced answer. So I would not have expected like a fight between you and David on permission versus permissionless, but glad to see that this is and Frank in between. So that this is not the case.
Just charging.
Just charging the one job. But I think it's really good. Like also, and I agree with what you said, Sabih, like that it moved on, right? It's not really this black or white. And also like on the regulator side, we do see like Basel requirements and everything, which is also more and more discussed for the permissionless work to make this a little bit more, let's say, like closer to a permissioned one. So yeah, let's see what it brings. So maybe David, to you, because you initially also mentioned like you think like the key or core of the financial market infrastructure will be on permissionless systems. Yep. So you can now pitch.
I guess there's a distinction here between Ethereum, the base protocol, being totally permissionless, and then anything on top of that being permissioned. USDC has KYC AML. You can create an L2 with your own KYC AML compliance logic built in. You can have ZK technology or any other privacy components that you need. You can brand it, you can customize it to your specific needs and have it as permissioned as you technically want. So I think there's a pathway here where you can deploy on a permissionless network like Ethereum, but in a very permissioned environment, like you were mentioning. I think generally across the board, if you think about it, it's like on a totally permissioned network that's not on a permissionless chain, then you're thinking in a similar analogy that I like to use is internet versus internet, where you had this like siloed walled garden system that no one wanted to adopt. It was extremely expensive to run, and ultimately, generally, those intranets failed, except for exceptional circumstances, I would say, where now everyone uses the internet. It's fully adopted. There's network effects, there's growth, there's scale, there's adoption, there's innovation, and I think we will see kind of a similar trend over the course of the coming years with blockchain.
So kind of a symbiotic relationship between permissioned and permissionless. So we need both, and where permissionless could be the base layer, and then permission system be built on top, as of what you see today for Ethereum and Ethereum-like technologies. Okay, Jochen, also maybe with your insights on capital markets and your background, like what do you think? Like, do you also think these infrastructures will work together? Will there be one dominant global whatever infrastructure? Or how do you see the future?
Global dominance is a difficult concept. I agree with, let's say, the hybrid world being described by the other panelists, by having it all and having it in different flavors. And if I look at the driver of this, it's scalability. If we want to avoid the mistakes of the past with a fragmented market, if we want to scale and want to grow, then let's say we need also permissionless, let's say, blockchains. It must be possible. The permissionless opens a new world, so to speak. And from a regulator's perspective, then the real question is, okay, not exactly which type of network wins, but how could we ensure as regulators that, let's say, those systems, those chains connect in a way that they preserve the regulatory integrity while still allowing the thing to grow. So this will pose a challenge to the regulators, this new hybrid world, but I think they are prepared to take up the challenge. They will go for it.
Okay. It's good to hear, and I think also like for the previous years, a lot of education has happened, is still happening, and must also continue to happen, but also happened on this side. I mean, Jochen, you also talked about integrating different chains. Maybe going back to you, Frank, in there.
So I stopped charging now.
So do you, for once at least, stop charging. So what do you think are the key challenges? If we see, a lot of systems coexist, they will be integrated into the others. Like, where are the main hurdles besides maybe regulatory nature?
Yeah, I mean, fragmentation. You see proliferating ecosystems that are diverse, which is great. They all serve a certain use case. We're very busy helping to build integrated ecosystems. And as a consequence, and by design, Chainlink is chain agnostic. So we're the natural pick to bring these ecosystems together, right? I'm be less esoteric about what I just said. Like, think about an ecosystem where a big CSD wants to create collateral mobility with tokenized assets that they may be able to tokenize in-house. At some point, that ecosystem needs to expand to exchanges that accept that collateral. Collateral needs to move. And the ecosystem will only work if it's frictionless. If you take down these barriers that currently exist, and you use middleware, enterprise-grade infrastructure to overcome these hurdles. Only then will you see full-on adoption. The beauty is that I can see that this is already happening as we speak, so I'm not thinking in fictitious ideas. This is a reality that's happening as we speak, and we're facilitating it. But again, I think the main important factor in all of this is that fragmentation needs to be managed away intelligently in order to scale systems and ecosystems. That's what we do for a living. And I think we're basically mission critical in that context. And we have lots of those conversations. And another thing that I want to add to this is we're past the point of, let's build a little sandbox and try it out. We're now full on in production mode, enterprise grade, battle hardened infrastructure that needs to sustain regulatory oversight, throughput over security, legal identifiers, standards, all that needs to be frictionless, and you need middleware to facilitate that.
And when we talk also about integration with the existing, banking, core banking system, etc., because it's the one side, right? It's the infrastructure to the outside, connecting different blockchains, different use cases, but then, of course, you also have to connect them to the key infrastructure. And maybe
100%.
follow up.
I mean, you can go in and tell banks and asset managers that their business model is like, you're doomed, because they're not. They're facing an evolution of the business model. And I think the core blockchain industry has learned a lesson there that there is a gradual convergence process, but not full-on disruption, because there's too much at stake, too much disruption risk. In my mind, what the industry is now doing, it accepts the fact that there is traditional finance platforms that will continue to exist, that will not go away overnight. There's no light switch that you just flip and all of a sudden everything's on chain and permissionless and we're all happy. It's not going to happen in reality. So I think that realism now kicks in, and the job that is at hand now is to connect all the parts of the workflow seamlessly and without friction.
And from a bank perspective, Sabih, like how do you think is this evolving? You know, because this is probably like a gradual process, and you know will not come from one day to the other. But how do you see this transition taking place?
Yeah, I think as you said, it's gradual. I think you've got to start with some lighthouse projects and use those as the basis to try and expand from that. And you know, for us, for example, our digital asset custody solution is the one that is the lighthouse project. We want to get that embedded, get that into the bank, and use that then as the mechanism to build out, you know, greater and greater capabilities. I think, as Frank said, it would be great if we could say, look, we're just going to shut the bank down for a year, upgrade everything, and then next year that would probably create quite a lot of issues, I would imagine. And therefore, the only way to try and change the tire while the car is moving is to try and find the smallest bit first and then expand from there. And so that's the way we're trying to do it. I think the other piece, which we didn't talk about too much, but for a bank is critically important, is all the risk and control elements as well. So it's not just about integrating and making things work, it's doing it in a safe and secure way that also protects the mothership overall. That's really, really important. And so we've invested a lot of time and energy to make sure that we're building out those controls in a really, really thoughtful way.
Yeah, and I really liked it that it's not possible to shut, you know, the bank, I guess, the bank down for a year and then do it. And I think, like, David, to you, even more impressive what you guys did with the Ethereum network at some point, right? To just switch while driving, switch one of the engines. So.
No, I think Ethereum has been live 10 and a half. I think July is going to be 11 years or something along those lines, without any network halts or network outages, 15 or 16 protocol upgrades, one of them being the merge from proof of work to proof of stake. So yeah, incredible feat of engineering generally across the board. So yeah, something that we're extremely proud of, and I think that's what a lot of financial institutions look at when they look at evaluating all of the different options out there.
Yeah, for sure. Jochen, there is also, of course, one stakeholder group which we didn't talk about today, which you know very well, which is central banks. So when we look about interoperability, connecting the infrastructure, of course, the ECB is also doing you know a lot of initiatives with Pontes and Appia. You know, how does this all fit into the future financial architecture?
Yeah, I guess first I would describe that Appia and Pontes using Italian names is not done by chance. Just think of Piero Cipollone, the board member in charge, having an Italian background. But now to Appia. With Appia, interoperability is taking finally the center stage. Or in Eurosystem speak, it's more the integration is finally taking center stage. And of course, as you might expect this from the ECB, this is not only about interoperability, it goes hand in hand with a quest for some form of standardization. Of course, yes, we know Frank, we know Chainlink, but maybe a little bit of standardization to back this up, this frictionless, let's say, interoperability is what the Eurosystem think is going to be needed. And of course, the Eurosystem will ask for a European governance, which probably, let's say, needs to have an international or global dimension. But let's say, yes, of course, the Eurosystem is looking at, the ECB takes it, and the ECB in Appia speaks a lot about public-private partnership to create this new European digital ecosystem. But let's say the ECB, of course, is in a position to drive this, because harmonization or standardization or interoperability has not necessarily a business case. However, from the ECB's perspective, from the Eurosystem's perspective, you don't need that business case. You simply do it. You use your, let's say, power of persuasion, or you say, well, if you want to have access to central bank money, if you want to post your collateral with the euro system, you have to follow the rules. And here, by the way, is the DLT version of the rules. Please, let's say, abide to it, adhere to it. So there is an element, let's say, of driving this by using access to central bank money. And so far the euro system has left it open. Whether this means, okay, we want to settle everything in central bank money on one chain, or whether other settlement assets, tokens, deposits, tokenized deposits, coins of any shape, e-money tokens would be permissible or not. And I think in the end, we will have an ecosystem where we do not only have central bank money settlement, but also other settlement assets happily living together in an interoperable fashion. And the ECB will make its first delivery towards that direction in September with Pontes by connecting the DLT to target two balances to allow for some kind of conditional settlement.
Okay, so yeah, basically a setup where we have a lot of different infrastructures where you can use for different use cases depending on what you need. So what we discussed on interoperability, and maybe closing this round out with you, Denis, at the end, is we talked a lot about technical interoperability, which is about the specific data that has been shared, also about regulation, is about harmonization. But maybe you can double down a little bit on really the role of the identifiers and standards for this interoperability piece, which I think is very critical.
Yeah, and perhaps I can kind of give another example of kind of in my previous life, I was working in a big investment bank, and we were running data analytics. And the biggest pain for us was reference data. How do you merge? It was equity trading when the fragmentation happened because it was MiFID, I think, where there's a bunch of new exchanges launched, multiple data feeds, all using their own different symbols. How do you merge that? So we had to build our own, essentially, reference data table, and every other single bank had to do the same thing. In fact, because it was a huge investment bank, other teams within the bank had to do the same thing. So within the same bank, it wasn't set up to be interoperable. So what we have now with the crypto, with the tokenization, is that there's opportunity to use these standards that are already used quite a lot in the financial industry, like ISIN, like DTI is fairly new, but they are ISO standards. They're market utilities. So the more people use them, the better it is for everybody, because everybody benefits from a common understanding of what asset you're talking about, who is the issuer for that asset, where is it tokenized, and ability to take that information, not just looking at the blockchain, but taking it off the chain, into your other systems, or moving to another chain. That centralized reference data, I think, is the key. What makes sense is using the ISO standards to look at the kind of fundamental bits of the implementation of like asset and the token. There are other things you can build on top of that, the information, taxonomy. Perhaps we're working with Skycode to look at the pairs. So there's things you can build on top of that, but at the fundamental level, you need a common language to transact the right things in the right way. And I think that's probably the lesson from the financial industry that crypto industry still has to learn.
So to close this discussion, let's, like in the last question, look into one thing. And we talked a lot about interoperability, harmonization, and stuff like that. And then let's go round by round on that. Like, what do you think is the one thing that the industry really needs to get right for tokenized markets, tokenized assets to scale? Whoever wants to start, yeah, Denis, feel free to start, and then. I
think I just covered it in my previous answer. I think getting that right, I think, is half the battle, and encouraging everybody to use it as a customers, because I'm not putting you on the spot, but like we've been speaking to not Ethereum, but another provider for DLT, and I said, why would I implement something that's a standard that's used outside the blockchain? I want everybody to come to me. So until the users of those blockchains actually say, no, implement this because that allows us to use you and everybody else, it won't change.
I think there's a lot that we need to work on, and the industry is definitely going to mature, and I think we've covered a lot of the points. I think 2 shameless plugs while we're here. We have one on privacy. We have a workshop tomorrow with our institutional privacy team. So getting privacy to scale across the board and having selective disclosure, ZK, whatever that actually ends up looking like, that whole ecosystem needs to mature. And then around quantum readiness, I don't think anyone's mentioned that, but we have a session next with a person on our quantum team. The Ethereum Foundation has been researching quantum readiness and resistance since 2018, I believe, Benedict, something along those lines. And Ethereum has a team and is ready to implement quantum readiness by 2027, 2028. So that's something that it affects the base layer of this whole situation, and it's something that we're ready for. So shameless plug.
More shameless plugs coming. My view of the world is that tokenization of assets will only work if you can add utility to the assets. I keep repeating myself, but what's the point of tokenizing a money market fund if and when it sits on chain, one wallet holds it, it doesn't move? I mean, it's nice to prove the concept, but we have moved on from that, I think, right? The industry needs to find utility. Utility will automatically create complexity because you have to integrate various systems that contribute to mobility of collateral, for example. Again, that's a technical challenge that you can either do in-house, or I highly recommend doing it with someone like us to get to scale. So it's all about, in my mind, utility, utility, utility. And that comes with technological integration and advancement. Over to you.
Thank you, Frank. So to keep up with the buzzword piece and go with something different, I'm going to say AI, and I'm going to try and figure out how to insert that into this sentence. I've said it now, I just need to figure it out. I think the piece on AI is actually the development of AI, firstly, has obviously accelerated so quickly. We've seen that in the last few months. I think if you spend any time looking to understand where AI is going and what it wants to achieve, then I think you come to the very obvious conclusion that blockchain technology is the best infrastructure layer for AI to take advantage of in terms of being able to make payments on our behalf, to acquire assets, and to move those assets around on a 24/7 basis. And so I think the development of AI will actually, by some sort of kind of subversion almost, I think help accelerate this story. So I think we should absolutely hang on to the coattails of AI. We're not in competition with it. We should hold on to it. I think there's a benefit there. The second piece I would say that we haven't really discussed, and is a different point, which is almost the opposite point to the one I just made, is actually most clients couldn't care less about blockchain, right, or tokens or standards or interoperability. They view those problems as problems for the builders to solve. And so I think one of the things that we do need to work on as an industry is what our client proposition is. So what is the proposition to an end client on a holistic basis? They don't want to hear about ERC standards or any of those things. They just want to know, the thing that I did before, can I do it cheaper and faster than I could previously? If yes, great, I'll have some of that. If not, then quite frankly, I'm not interested. So I think one of the things we need to do is think about how we package up some of those services, and that will automatically drive scale, because when we're able to position that proposition really effectively, that will just pull everything we're doing along further.
I would start by merging two buzzwords. I would merge interoperability with utility, because if the industry gets it right, i.e. we have interoperability across networks, across jurisdictions, and between traditional and DLT infrastructure, let's say the utility is exactly overcoming the current fragmentation. And let's combine it with Sabih, with your proposal, let's say, to make this interesting for clients. Okay, we can provide a better and cheaper service. He can get access to assets he is, let's say, not able to access at this moment. However, with fragmentation overcome, with a little help of, let's say, DLT, why not? So it's interoperability, and this is exactly what we try to do at Axiology. We have this built in by design. It's interoperability, and I can double down or triple up. Whatever you want, can repeat it 5 times more.
Perfect. So in this closing round, we had a few, rather boring, in a positive sense, answers about value propositions and utility. And then we had interoperability, but also luckily we had quantum and AI also mentioned. So what would be a panel these days without those terms? Yes. So So I guess that was actually it. So thank you so much for listening. Thanks for the great discussion, and handing over to you, Stefan. Thank you.